let's shift bases a little bit. Let's talk about judgment preservation insurance. When I started to think about litigation insurance and read up on it, my mind certainly went to judgment preservation insurance. But as I read more, I understood that's not really what we're talking about here. Why don't you guys walk us through what that judgment preservation is all about, where it fits, and certainly why it's a bit of a misconception that that's really what we're talking about here.
Yeah, happy to do that because I think I'm probably a lot more steep in that market than Ignite is. Ignite does not write that particular product. So judgment preservation insurance is, I think, changing a bit from what it was a couple like last year into this year, and I think it's focusing a lot more on trying to create a broader base of product offerings and trying to create more diversification that's present and less insuring of really big style judgments that I think publicly a lot of folks have seen in the press, to focusing on products that are like judgments that aren't as large, or there's a substantial retention component or self-insured component, because ultimately what these products, and this is a common theme I think you'll notice across everything we're talking about here, what these products are meant to do is to incentivize rational economic action and help to lead to a better result for all in a shorter period of time. So when looking at that, we attack it with that lens. We look at an insurance product that can be a very powerful tool in the right circumstances, and I think has been a very powerful tool in a lot of the instances that I worked on, where it helps to have everybody think rationally and really have that third party review of it. But as you pointed, as I think we spoke about before, and it's not a massive market because there are only so many judgments in excess of a specific amount that are insurable. So once we start taking out, let's say the $1 billion talc verdicts, right, or the big roundup verdicts and things like that, the amount, of commercial litigation that falls into the category of what can be insurable isn't a massive market. I mean, it's still a market, but when we're looking at creating more premium base and premium flow for those carriers, they've started to develop newer products that we're definitely seeing a more of an uptick on. And this goes that adverse judgment insurance, again, something Ignite hasn't really focused on at that point, or regulatory risk transfer. So, we work with clients who have a permit issued, facing a lawsuit from a third party seeking to invalidate the permit. They want to go ahead with the investment to get everything going once that's done. And the investors are concerned with putting all this capital into a project and then the project going away. So looking at those types of markets is kind of where there has been, I would say, a much larger growth over the past 6 months for sure at that point.
So Nicole, let's turn to you for a second. This market is new. Lawyers like to work with reliable counterparties and make sure that that the whatever financial product or insurance that they're seeking out is reliable. Is there data on the payout of claims at this point? What can you tell us about that process? And if you're a lawyer or funder thinking about, well, okay, I'm interested in taking out this policy, but how do I make sure that I'm working with the right insurer? Walk us through all that.
Sure. So, again, as you just said, Evan, for the consumer, the purchaser of insurance, you want to know whether the carrier with whom you are working, who is insuring your litigation, can pay out or satisfy a claim. And the best indication, I think, of whether an insurer can do so is to look at their AM Best rating. So AM Best is a credit rating agency that began reviewing insurance companies back in 1899. It's completely independent. And essentially, AM Best just reviews and issues a rating of every insurance company on an annual basis, and its grades illustrate an insurer's ability to pay out on claims and meet other financial obligations. So it goes without saying that an insurer has to be financially healthy to pay out on claims, and as an independent credit rating agency, basically AM Best just translates balance sheets and other data into letter grades that can be understood by consumers, investors, and others in the insurance industry. I think AM Best rates about 16,000 insurance companies globally. And just generally speaking, its grades range from A+ and flow all the way down to D. Each grade also, like in school, has a notch, so it could be an A+, it could be an A-, it could be a B+, but I would also add that their grades are relevant to all kinds of insurance, and that they grade, that they look to several categories when assigning grades. So an insurer's ability to meet short and long-term and ongoing financial obligations, but generally it's best known for its financial strength ratings, which look at a company's ability to meet all of its policy and contract obligations. I think just generally speaking, anything in the A category is considered to be excellent or very good. Anything in the B category is deemed to be good to fair, and anything below that is considered to be marginal, weak, or poor. So generally, when you're looking to work with a carrier, you're looking for something within the A range, the A grade range. Let's see. As far as otherwise, I mean, I think when you're working with people, with brokers, with clients, invariably they're going to ask you if your carrier has ever had a claim and if they paid out. In our case, the answer to both of those things is yes. And then just one last thing to note, because, people are always sort of a little bit suspicious and skeptical. So I think one important thing to note is that when we issue policies, there are very few exceptions as to when or why a carrier will not pay out a claim. So fraud, for example, is one of those exceptions. But in any event, the policy is going to define very clearly losses, claims, exceptions to paying out claims. And that is really the document that's going to govern any transaction. And there really is not a lot of fine print.
Got it. So, I mean, look, that one would expect that if you're the, a top funder or, a large firm, you're obviously going to look at the insurers that are the most reliable, right? That's what you're ultimately buying into when you're buying insurance. But, it's more complicated than that, right? Mike, I think you said earlier that Nicole's firm does certain types of claims but doesn't do others. Obviously it must be a tremendously nuanced process in matching together the putative insureds and the right fit and baking the cake, right? Mike, why don't you walk us through what that looks like and how complicated it can be?
Yeah, I will. And to start off with, I think the really important thing that I have to talk with a lot of my clients about up front is the difference between what these products are, this type of insurance, and what I would say like your directors and officers liability insurance or commercial general liability insurance. So I used to be a policyholder lawyer. I also used to represent insurers in a former life too. Those products are really different than what we're talking about here and have a lot of exclusions and a lot of fights surrounding what falls into a coverage grant, what doesn't, what's excluded, what's not. And the reason behind that is because they're meant to be perspective looking. So they're a forward looking risk transfer. So you buy the policy and you're saying, well, if something unknown happens or unexpected happens during this year period, the insurance should cover it. And what that contract is then doing is they have this broad insuring grant and they have all of these exclusionary language to say what we're going to cover and what we're not. And we can look at, for instance, the pollution exclusion, which has a lot of litigation around it. The way the pollution exclusion is defined in Indiana is much different than Illinois. Indiana, you have to specifically list every pollutant. Illinois, you can have a much broader exclusionary language present. And this is just a creature of the courts. The products we're talking about here are insuring things that are known at that point. So litigations that are known or claims that are known. So there isn't as much to exclude because everybody could fully understand what we're insuring at the front end. And I think that's a really important thing that I talk to my clients about up front, is like, here are the differences between the two. These are ultimately contracts. If it falls within the grant, like, there can be a dispute potentially about, on the margins, but if there is a dispute, it's not going to be a protracted one because the language is all fairly clear here. As Nicole, said at the front, these are all mostly limited to a fraud type exclusion, material misrepresentation, or other, other ways where folks aren't necessarily acting as their, like unethical conduct in the event of a law firm, or sanctions or things like that, right? Like pretty catastrophic events.
Yeah, I mean, and look, when you're dealing with D&O insurance, or whatever type of insurance you're dealing with, that a vast majority of corporations in this nation have, it's essentially an off-the-shelf product. I'm sure, I imagine
Yeah.
there are dozens, hundreds, thousands of brokers that are dealing in this stuff. We're not exactly talking about an off-the-shelf D&O policy here.
Correct.
I mean, there's a tremendous amount of nuance that goes into it. I mean, how much work are you guys spending on the front end, crafting these deals bespoke, especially because they're just so new?
A lot. It is a very, very, very complicated process, because it not only do you have to go through the initial, is this something that can get insured or not? Because I don't want, as a broker, I don't want to like waste my client's time on something or waste their money getting everything worked up. And B, I also, want to make sure that when I show something to the markets, we're going to get at least a positive reception from the markets, even if it's not necessarily for them. At least it's a well thought out package. So that's number one. Is, there's a lot of work that's done at the front end to make sure that everything's packaged correctly, everything's structured correctly, and we're answering all the questions that I like based on my experience. I know we're going to get. After that, then it comes through to working with the client to figure out what exactly the problem they're trying to solve for, and structuring the insurance contract and the insurance request to solve for that problem. And then I go to a market. So I'll go to Nicole and say, what do you think about this? And they might say, well, we like it, but we need to have it structured this way rather than the way you initially said. And there's some back and forth on that point where I have to talk to my client and work on that. Once we're kind of at a meeting of the minds of what the product should look like, then we go into a diligence process. And maybe this is the part where Nicole could walk through kind of what they're looking for on the diligence side of the world, and kind of where we go from there. Because then it's more in their hands than it is mine. Mine is kind of getting their diligence, goes to the carrier more, because I can't control that process for a whole host of reasons.
I mean, we definitely, it's not the same as, there's actuarial data to look at litigations, and there isn't yet, predictive AI software that we're using or something like that. We are working much like funders work to diligence litigations. So we're looking at the merits, we're looking to see if there are any jurisdictional hiccups, we're looking at the judges, we're looking at the settlement prospects, we're looking at how robust and realistic are the damages. We are looking at the venues, we are looking at the law firm's track record and the lawyer's track record, we're looking at the funder's track records. So it's a very sort of in-depth diligence process. I think one distinction that isn't always true, but is often true, is that unlike a funder, we are less concerned about collectability. We're often insuring legal risk only and not enforcement risk or collection risk. So that is one difference. I'm not saying we won't do it. Sometimes we will. But every deal is bespoke. So every deal is bespoke.
And then we start talking about the insuring contracts, and that's a whole other thing. But blessedly, like we've all seen, LFAs, collateral purchase agreements, capital provision agreements, whatever term of our prepaid forward purchase, the acronyms could go on and on. We've all seen those. Thankfully and blessedly, these are a lot more succinct than those very complicated documents, because I think, the insurance world lends itself to a lot more, succinct language. They're not as concerned about liens on various things and what have you, because that's not really within their purview, given that they're getting compensated to take on the risk at the front end. So having a perfected lien over an asset, I mean, they don't really need that. I have not seen that come up in an insurance deal yet. I would be surprised if it does.
Awesome. Well, guys, look, I couldn't imagine two better people to have on today to walk us through the litigation insurance markets. I guess as our last hurrah, why don't we go around the horn and give our grand predictions for the litigation insurance market from each of you guys.
Well, I'll start. I think it's going to continue to grow and to become more mainstream. I think the AmLaw, 100 firms are going to start using it more and more. I think hopefully companies are going to start using it more and more and more. And I think, it's here to stay and it's here to grow. And I think that, at least in my experience, brokers and MGAs alike are very cognizant of the role that they play within the space, and they attempt to be good stewards of the industry. And, as we've highlighted kind of throughout this podcast, we are very careful about what deals we bring to market and which transactions can get insured and, up to what limit. So I think as long as, the market continues to be healthy and people continue to care and behave responsibly, I think it's going to really grow. That's my prediction.
I echo. I think we're in a really interesting time, and I think it is it's going to grow, and I believe new products are going to be offered in the next years that we're not really seeing, because if we look at what litigation is for a corporation and for, the folks that help those corporations solve problems, it is ultimately the most unpredictable asset or liability out there. I mean, you just don't know which way it's going to go on an individual basis. But if we look at a broad-based trends, you can figure out where everything's going to kind of go on a broad basis at that point. And when we start looking at broad-based trends, insurance is kind of the answer to helping solve those broad-based trends. So I'm just viewing this as kind of, the beginning of, I think, a really interesting and unique product offering out there that really helps to solve what, corporate America has been asking to try to solve for, which is the unpredictability stemming from litigation, both from an affirmative standpoint and a defensive standpoint, and really, crafting something that works there. I think where it's starting is an interesting kind of starting point, and as it continues to evolve, I'm pretty excited to see. And as a broker, my job is to kind of be pushing where I'm kind of visioning the market to go and trying to get, my insurance, like the insurance folks that I work with, the insurance counterparties, really to begin to see the world like I'm seeing it, and hopefully we can come together and create some new products. And to date, I've been very impressed by the insurance markets and their willingness to get creative on this. And even I could say developed a couple new products with various folks that are pretty innovative and have worked out for everybody, which is great. So very excited to see what happens in the next year or two. Looking forward to the next one.
Well, thanks, Mike. Thanks, Nicole. Thank you, viewers, for joining us today, and see you on the next episode of our podcast. Speak soon. Bye-bye.